Are you priced out of the property market? Have a borrowing capacity or purchase price of around $350,000 and are unable to find properties anywhere? So if that's the case, I might have some options for you. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors and I buy properties all around the country using a data-driven approach. So if you want to work with me, go to my website propertyframeworkbuyersagency.com.au and book a session with me there. If you've got about $350,000 of purchasing price, you're a first-time investor, you're on a very low budget, or you're just trying to buy one more property with that $350,000 purchasing price, there might be some options here, and I'm talking about the unit market. So today we're going to talk about where exactly there's pressure in the unit market, where the prices are moving up, what type of rental yields you can get and what type of units you can buy, and some of the things that you need to be aware of when buying units in these markets. So I want to emphasize I'm not a fan of units. I don't encourage buying units. But this is only the scenario where you don't have enough borrowing capacity to buy a house. And it has to be very specific markets where there is enough pressure in those markets for the prices to rise further. And it also has to be in markets where there's a shortage of homes and where there is a considerable gap between houses and units, which can push the prices of units higher and higher. So let's get into this. The first market I'm going to talk about is Townsville. So looking at the price change in Townsville, you can see that the unit prices have clearly started moving up from 2020 onwards. So there is an upward trend in terms of the unit prices in Townsville. Let's just look at some market pressure indicators for the unit market. Days on market here for Townsville reducing from 80 days all the way till about 20 to 30 days. Stock on market is declining as well over the last couple of years. The inventory, you can see it just tightening up and sitting at around 0.5 months of inventory now, okay? And in terms of the vacancy rates, we see it sitting around that 2.50. So all of this is indicating prices are moving up and you're seeing market pressure of that unit market in Townsville. So all of this is indicating that there is price momentum with the unit market. Now let's look at suburbs here. So these are suburbs where you can buy units in Townsville, and you can see over that 1 year, most of these suburbs have recorded double-digit growth. And over 5 years, some of them have recorded nearly 100% growth. The suburbs like Hermit Park, Hyde Park, Garbutt, the property prices of units have doubled, but you must take note that they're coming off a really low base like 100,000, 120,000 and so on. So there is opportunity here because you can see the yields here sitting around 6 to 7%. Now let's move to the second market, and that is Mackay. Now looking at Mackay, again very similar to town, so we are seeing that upward pressure on the unit prices. Prices have been recovering since about 2019, 2020 and have been moving up sharply. Okay, again unit market, days on market dropping sharply in Mackay, sitting around 30 days. The stock on market is also reducing. So this is the unit stock. We're seeing it drop sharply over the last few months. The inventory is tightening, as you can see here, over the last couple of years, and it's currently sitting at 0.5 months. Vacancy rates very healthy at 1.50%. So again, certain suburbs only where you can buy units in Mackay, and I've showed them here. You can see the price range is around that 300,000. Last year, all suburbs have recorded double-digit price growth, and over that 5 years, you can see the price is around that 50, 60, and even some of them like North Mackay have recorded 100% price growth. Okay, so again, a market where there is price momentum in terms of buying a unit. Now, and the last market here is Gladstone. In Gladstone, you can see again that recovery coming from 2020 and prices moving upwards. Days on market here dropping. It's sitting around 60 days, but I'm expecting it to drop further here. The stock on market is just steady, nothing significant, but you can see it's dropping over the last few months again. Inventory is more or less steady, but a general declining trend sitting at around that 0.5 months of inventory. Vacancy rate sitting at 2.50%. Now, suburbs in Gladstone, here we're seeing about 6 to 7 suburbs, 6 suburbs where you can buy units in Gladstone. We're seeing price points really low, 200 to 300,000. And look at this price change over the last year, 20 to 20% in some of these suburbs. And you can see that over the 5 years, most of these suburbs have recorded more than 100% growth. But again, these are coming off a really low base. We're talking like even under $100,000. Look at that yield column there. So really high rental yields. Okay, so we look at 3 markets here: Mackay, Gladstone and Townsville, all of which where the unit market is moving upwards, all of where you can even buy units as low as $250,000 and get about 7-8% rental yields. Let's look at the extent of price movement in the unit market. So if you look at this unit, which was a 2-bedroom 1-bathroom in Railway Estate, you can see that in 2024, January 15th, 2024, it sold for $215,000, and then within that same year, September 17, 2024, it has transacted again and it's increased by nearly $100,000. It's sitting at $313,000. So that's a significant jump in the price. One more again. So this is a unit in Pimlico. We can see that in 2021 it sold for $215,000, and then in 2024 it's risen up to $370,000. So you can see the momentum building up there. Last example here, one more in Mandingbura. You can see that in 2022 it sold for $185,000, and now it recently sold in December 2024 for $300,000. So enough evidence to show that there is some good momentum in the unit market. Like I said before, there's a major factor to consider here, okay? And that's the body corporate fee. Like with anywhere buying a unit in Australia, you have to factor in body corporate fees, and body corporate fees can be expensive in these regional markets. So let's look at how body corporate fees can affect your cash flow, right? So I've taken this example. This is a unit, a 2-bedroom, 1-bathroom unit in South Gladstone, and it just transacted in December 2024 for $223,000. So purchase price was $223,000, okay? And then it rents out for around $360 per week. We have council rate sitting at $2,400 per annum. The body corp in this case is on the lower side. It's $2,500 per annum. And this is the cash flow at a 6.50 interest rate and a 10% deposit, right? The rental income is $18,720. We have our loan repayments, property management fee, council rate, and the body corporate fees. And you can see the cash flow is actually very healthy at only minus $2,300 per year, which is really healthy in this interest rate environment. And now let's look at another example with a higher body corp fee and how that can affect cash flow. Look at this unit purchased in Hermit Park. Again, it's a 2-bedroom, 1-bathroom unit. Purchase price is $350,000. Rents for $450 per week. Council fee is $3,600, but in this case, the body corp fee is much higher at $5,778. So the cash flow here at 6.50 interest rate and 10% deposit shows that it is negative by around $8,949 per year. Okay, so this $8,949, while it's much higher than that other property, it's still in line with the cash flow that you would get if you buy a house in this interest rate environment. So still, it doesn't look like it's super high and a very high amount. It's still somewhat that's comparable to buying a house. That's the summary here. So what we need to understand is that there is opportunity in the apartment markets here, but we want to keep that low body corp fee as low as possible, right? And how you keep it as low as possible? Look for older styled apartments. Look for apartments where there's no pools, gyms or elevators. Look for low-rise buildings and minimal shared facilities. So in these type of apartments or units will have a much lower body corp fee. The final considerations here. So if you are trying to get into the market with a budget of around $300,000, then I think it's advisable for you to try to not buy a shiny unit, but rather buy a unit that needs some work, where you can add value and get an instant equity and then get the market pressure that pushes the price further onwards, right? So in that case, you get the equity and the growth that comes from the market movement. So look for units which have that value add potential, and then look for units with low body corp fees. In that way, you can get units which are moving up in value, which can give you healthy cash flows as well. Again, this is not superior to houses. It's your last option if you can't buy a house at that price point. So that's it for this video. I hope you found this content useful. If you liked it, then please subscribe to my channel, and I'll see you in my next video.